In early April, the US bond market experienced one of its sharpest sell-offs in recent memory. The 10-year Treasury yield surged from 3.86% to 4.5% in just 5 days, a level that we haven't really seen since 2007. And the 30-year yield, well, it hit 4.92%, marking its biggest 3-day jump since 1982. There are several main drivers, but all of them boil down to surging uncertainty and deteriorating outlook as confidence in the United States continues to decline. With major tariffs slapped on Chinese goods, global trade has been rattled, and investors, of course, are not thrilled. These tariffs are adding inflationary pressure, slowing international investment, and also tariffs are pushing bond yields even higher. The Fed may not be in control of inflation. Worse, it may be too hesitant to act to prevent a slowdown. Either way, this creates fear among investors that the Fed's next move might be a little too late, which adds to the already out-of-control volatility that is created by Trump's flip-flopping on his trade policies. On top of all of this, the US is issuing a massive amount of new debt. When more bonds are flooding the market, it pushes prices down, of course, and it pushes yields up. When yields go up, borrowing costs in our country across the board increase as well, including borrowing costs for US consumers. The US is issuing a ton of new debt to cover its spending, and someone has to buy all of that paper. In 2024, the cost of debt servicing reached $1.15 trillion, with net interest payments totaling $843 billion. This represents a significant portion of the federal budget, exceeding spending on national defense and on Medicare. This bond market sell-off isn't just a finance story. It is not something to be dismissive of. This affects everything from mortgage rates to credit cards to business loans. And this is precisely why one of Fed's top officials shared that there might be another bailout, this time of the bond market. It is becoming too obvious, even for the Fed officials, not to admit that the economy is about to hit a major painful roadblock as the result of years of uncontrolled spending and the latest policy moves that escalated global trade tensions without any off-ramps.